What's going on, guys? My name is Tyler with Revamp Credit. In today's video, I am going to explain what a credit score is in 2023 or what a FICO score is. Basically the same thing, but I'm going to explain everything to you in this video. Stick around. So first, let's talk about what a FICO score is. FICO. Basically, just another word for credit score. When you hear FICO score, you might be like, well, what is that, right? But it's actually literally just a credit score. So a FICO score or credit score is basically just a 3-digit number that is based off of your credit report. It helps lenders determine how likely it is for you to repay a loan, etc. When you apply for a credit card or a loan, lenders need a fast and efficient way to check if they're actually going to be able to loan you that money or not. Basically, your score measures how much credit you have, how long you've had credit, how much credit you're currently using. It measures stuff like that, and I'm going to talk about that all in a second. All right, I'm actually going to scoot over here really quickly so I can put this up on the screen for you. Oop, wrong side. Put this up. No, wait. This up on the screen for you. So this will show you kind of the ratings of the credit score. So as you can see, if you have a 580 FICO score, it's poor. Your score is well below the average score of the US consumers and demonstrates to the lenders that you are a risky borrower, guys. Okay. Then you got 580 to 669, which is a fair score, meaning your score is still below average score of US consumers, though many lenders will approve loans with the score. And then you got 670 to 739, which is a good score. And then you have 740 to 799. And then you have the 800 plus, which is excellent. You're way above the US consumers and you're very, very, very likely to get approved for credit cards, loans. You're not seen as a risky borrower. They know that you're most likely going to repay your loans and your debts. So that's the score you want. Everyone wants to strive for that higher score, but it's a slow process. It takes time, it takes patience, and a lot of hard work and dedication, guys. See if I can do this one. I'm also going to put this up on the screen here. Boom. This is what your credit score is made up of. So as you can see, 30% of your credit score is made up of the amount owed. Then you have 35% of your score, which is the most important, is your payment history. So are you making your payments on time? Do you have no late payments? Then you have things like credit history, which makes up 15% of your credit score. Then you have credit mix, which is 10%. And then you have new credit, which is 10%. So credit mix is like if you have a credit card, and then you have an installment loan, then you have a revolving loan, then you have a car loan, et cetera, or a mortgage. That's what basically goes into your credit mix, which I can make a video on as well. But the most important two things that you really want to focus on, as you can see here, is the amounts owed and the payment history. You want to make sure you're making your payments always on time every single month. And then you also want to make sure that you're paying back, that you're also not using your full credit limit and you're keeping that utilization down. So what that means is, for example, if you have only one credit card and it's only a $500 limit, let's say you just got a credit card, you don't have credit, so all they could approve you for was 500. Let's say you're using all 500 of that credit limit. That would mean you are using 100% of your max credit limit, which is bad. Don't do it. You only want to use 10% of your credit limit. I wouldn't go below that or above that. Some people say 30%, some people say 10. I personally say 10, just preference. I think it works better. I think it's just more of a safer play, but that's up to you. But the whole point of what I was trying to say is if you're using all 500 of that limit, your credit's going to go down because you're going to be using 100% utilization, which doesn't look good to banks, doesn't look good to anybody. It hurts your score. So don't get in the habit of that, okay? So again, guys, 35% of your FICO score or credit score is your payment history. Banks, lenders, whoever is looking at your score wants to see that you have a history of paying your bills on time, and it's just very, very good for your credit scores. The second you get one late payment, it could drop your score a lot, guys. So make sure to try to not do that, okay? Then they look at late payments. They don't want to see late payments. Payments over 30 days late will typically be reported by your lender and hurt your credit score. Trust me, I've been there, I've done it. I've had to go through hoops and hoops to rebuild my credit. I was an idiot back in the day. You know, luckily I learned my lesson and I taught myself about credit. That's one of the reasons I know so much, is because I've been there. I've had bad credit in the 500. So if you're there, don't worry. It's definitely possible to get out of that hole. It just takes time, patience, and a little bit of research, guys. So don't feel bad. So here's where FICO scores get a little bit confusing, at least for me, in my opinion, because there's so many different FICO scores. For example, you have your FICO 2, FICO 3, FICO 4, FICO 5, 6, 7, 8, 9. They have 10, 10, I think 10T. There's so many different FICO scores, guys. So I'm gonna try to explain a few of them to you guys, but this is just an informational video. Obviously, you want to do your own research as well. I can only give you so much, but I just recommend everybody do their own research and look into it themselves as well. So FICO 8. Oh, before I explain these, different lenders pull different FICO scores. So, when you're applying for a credit card or a loan or a car or a mortgage, certain lenders might pull or use a different FICO score. One might use a FICO 8, one might use a FICO 9, one might pull the FICO 10, and they're all different. So you kind of have to know about the different ones and see and know what they are. So some of the scoring models that you may have heard of would be the FICO 10 or the FICO 10T. That would be because I believe they were introduced in 2020, so they're a little newer, if I'm not mistaken. But the FICO 10 credit score is designed to be the most productive scoring model to date, giving lenders a more precise picture of someone's credit card risk or credit risk. So those are some two of the ones that are kind of more important to know about. FICO 10 and FICO 10T, they still follow the basic FICO algorithm that focuses on payment history, utilization, credit age, credit mix, credit inquiries. What makes FICO 10T different is the use of the trended data. So the FICO 10T and the trended data, basically that score looks at your trending data from the past 24 months or even further. So basically look, is this person keeping a balance month to month on their credit card? Or is this person paying their credit off in full every month? So people are saying, experts or people are saying that the FICO 10 and the FICO 10T scores are going to take over the FICO 8 score. So kind of backtracking now and going back to the FICO 8 score, which is the one that they still kind of use the most, is the FICO 8 score. So for example, if you go to apply for a credit card or a loan, the lenders are most likely going to pull your FICO 8 score, but I know that some now are also doing FICO 9 and FICO 10. So it kind of just depends on the lender. You kind of just want to see, make sure, ask questions, look at the FAQ, maybe even call them up and say, hey, which one do you pull? I'm not sure if it works or not, but that's what I would do, or at least try first. But most likely it's going to be your FICO 8 score. So before you apply for anything, you want to actually look up what your FICO 8 score is. And I actually made a video on how you could get your exact FICO scores that are most accurate. So again, your FICO 8 score really lets lenders look at your credit utilization, late payments, small balance collection accounts, and things like that. But all in all, basically a FICO score or credit score is made up of payment history, the amounts owed, new credit, length of credit history, your credit mix. And then you got your FICO scores, which, you got your FICO 2, 3, 4, 5, 6. But the most important ones to know are the FICO 8, 9, 10, and then the 10T. So if you want to do any research, I would definitely research those ones. So this was credit scores explained in 2023. If you enjoyed the video, please like, comment, and subscribe. I'm going to make more videos like this, more free content. Again, it's kind of hard to put everything all in one since it is a lot of information and there's so much that goes into it. And I don't want to just, fill your brain and make you confused like some teachers do at the universities or in the high school. They all just try to give you all this info. I could be like, this is your credit score, FICO 2, 3, 4, 5, 6, 7, 8, 9, 10, 10T, payment history, credit length, credit mix, credit cards, loans. You know what I mean? It's going to be hard to retain. Again, I'm Tyler with Revamp Credit. This was your credit score explained in 2023. Like, comment, subscribe. Hope you enjoyed the video. I'm still saying Happy New Year because it's still not the middle of the month yet. So Happy New Year. Follow for more free tips. Take it easy.